Hey, everybody, welcome back. Today, our special guest is Charmy Galang, and she is zooming in from beautiful Laval, Quebec. And she is a multifamily property investor in Quebec. And I think we're going to have a lot of fun talking about this because, I'm Canadian myself. A lot of our guests and our listeners are Canadian. A lot of them are American as well. But there's a lot of curiosity and probably misconceptions about investing in Quebec. So, Charmy, very nice to meet you. Welcome to the show.
Thank you, Dave. Thank you so much for having me.
My pleasure. So, Charmy, let's start off. Why don't you tell folks a little bit about yourself and your real estate background? When did you start investing in real estate? Why did you start investing in real estate? How did that all come to be?
Sure. So actually, I came from a banking background. I was in banking for 20 years.
Really? Wow. Okay.
Yes.
Yeah.
Recently retired myself. So I'm a full-time investor now.
Congratulations.
When I started my career, I actually did mortgages, but I never invested myself. I really just gave mortgages to clients. And then with my career, I ended up in the financial market. So I retired doing stock market investing. One of the main reasons I would say I started in real estate investment is I lost two of my very close family members at a very young age. My dad passed away at 46, and a few years ago, my sister passed away at 42.
Oh, my goodness.
So it really hit home that we don't have that much time. You never know. We never know how much time we have, right?
Yeah.
And I didn't want to work until 65. I really want to enjoy life more. And I also had, I have my two very young kids at that time too. And so I started looking, I'm like, I can't just be working until 65. I really want to figure out another way. And I was actually following some people, and I saw this woman who was talking about real estate. And she was teaching real estate in Quebec. And I'm like, that's really interesting. I never looked at it in that perspective. So
just out of curiosity, who was it? Maybe I know them.
Oh, actually, I can't remember her name. Like,
okay.
This is like a few years ago. She's a woman, and there's not that many women actually.
Yeah, that's why I'm thinking. I'm trying to remember her name off. Did she write a book? Is she part of the big club in Montreal?
No, she's not part of the. I know which club you're talking about because I did a course there.
yeah. Somebody else. Sorry.
Yep. That's it. Yeah, because I did a lot of actually real estate investing courses before I dove into real estate, and that's what it started. I said, you know what, I'm going to start investing in real estate, and fortunately, it went very well. And I reached out to my family because I'm very close to my family, and that's how I started real estate investing as well. I said, I'm taking all these courses. I think it's going to work very well. And the advantage when your family loves you and they trust you is usually, it'll go well. And so I was able to purchase a few properties within 2 years. And I always wanted multifamilies. I just found it was, I would say, less risky because the smallest we have is 3 units and it goes to 12 units. Because, if one of the tenant leaves, you still have at least the other units that are getting rented.
Right.
So
very, very interesting, Charmy. And yeah, so coming from a banking industry, being in the mortgage side of banking as well. Yeah, definitely a very, very conservative business. That's for sure.
Yes. Yeah.
So I can understand a little bit about why it took you a while. It sounds like you're probably an analytical kind of person as well. Would that be fair? Are you a numbers person?
It helps. Yeah.
yeah. Well, again, it's just kind of, it takes a while to get the guts up to pull the trigger. So congratulations for doing that and bringing your family on board. So you had family investing with you right from day one?
Yes.
Nice.
Yes.
So when you say you've got family working with you, how many people out of your family have actually put money on the table and invested with you?
Right. So actually, I have my brother, his wife, my husband, and my brother-in-law. So we're actually 5. And we have 2 different companies. Plus, I've also invested with just my husband. So
yeah, it depends on the deal and how much is required. Okay, very cool. And are most of these investments, are they kind of like joint ventures, or are you just basically borrowing the money to invest and the property goes in your name or your company, or how does that typically work? Just out of curiosity.
Yeah, so the way we did it is actually a corporation. So we're all shareholders.
Hmm.
So we each have our own ownership, and I'm pretty much really the working partner, and I also put money in the business. So yeah, so we created an incorporation right away. I thought it was easier, and
Yeah.
it was easier to follow as well. And coming from banking,
Yeah.
I, I like the structure. So
Yeah. So what I can see the big advantage to that. I guess one of the downfalls might be if you want to buy a property that the one or two of the people that are shareholders in the corporation don't want to buy, then
mhm.
how do you and plus, I mean, how does everybody always be bringing money to the table to buy more properties, or are you just kind of purchasing them, renovating them, refinancing and recycling the money over and over again?
So we did both, honestly.
Yeah.
I was very, it's funny because a lot of people were saying that, 2020 was the worst time to invest because a lot of people were there's a lot of people bidding, but it was easier to get financing because their interest rate were very, very low. I
Yes.
think people forget that. It's all a numbers games in
Mm.
financing, right? So we're able to buy more properties a lot faster. And yeah, like I think like as soon as the numbers make sense, Dave, and that's what's nice when you're doing a multifamily, it's all in the numbers. So for
Mhm.
them, as long as it makes sense, it's profitable. They were all ready to invest, and I was very fortunate that I was able to refinance at least half of them within a year or two,
Mm.
because we renovated as well.
Yeah.
We did some work ourselves, and by renovating, refinancing, we're able to buy more properties.
So I love this conversation, Charmy, because you're probably the first person I've interviewed that has set things up this way with a family group, and you're kind of all in this. You're leading the charge. You're the boss, so to speak. You're the one that you're putting your own money in there, but
Yes.
you're finding the deals, you're crunching the numbers, and basically they're just saying, "Hey, Charmy, we'll we'll listen to you." So when you started that corporation, like, did everybody bring different amounts of money to the table, or did you say, okay, hey, let's each put in, I don't know, 50 grand, 100 grand, whatever it is, and start with this big pool and go from there? How did that kind of progress?
Yes, it was really like different percentage. We went by percent. My husband and I had the biggest
Mhm.
part of it, and and that's why we opened a second company afterwards, because the percentage changed afterwards. So really was whoever had this amount, we will work the numbers out.
Okay.
Yeah, that's how I did it.
Yeah. So did were people bringing, were some of your in-laws bringing more money in after the fact? Did that kind of change over time, or how does that work? Because it's percentage. You're all
Mm,
shareholders in the corporation.
that's it.
How does that vary depending on if people bring in more money after the fact? How do you guys do that?
So it hasn't changed yet, the percent. The way we did it is that every time we refinanced, I was able to give them back the percent, and we would just buy more. But I do see the difference would be in the corporation. How I think there's a way to do it, Dave. You'll need your accountant to help you with that,
And your
for
lawyer as
sure.
well? Yeah, yeah.
And yeah, yeah. Unfortunately, that's what I would say though. When you're incorporated, it is a lot more expensive. Like the lawyer, the accountant.
The annual filing fees and all
Yes,
the possibility of double taxation if you don't have it set up properly. But it definitely
yes.
does make things cleaner
Mhm.
and probably a lot easier for people to get in and out because they're buying and selling shares, not specific properties.
That's
Very,
it.
very cool. So you set up a second corporation just for you and your husband, is that correct?
No, actually, the same investors. It's just that our ownership were different.
Oh, I see. Because they
Um,
brought more money to the table, or different amounts of money to the table. Second that one.
exactly. And also the lawyer was saying at some point when it's a few million, you should open another corporation. So it was
Got
also
it.
for that safety factor.
Liability type stuff. No, that
Yes,
makes sense. Yeah.
that's it.
Interesting. So Charmy, uh what have been any of the challenges, if you've had any,
Mhm.
working with close family members as your partners and especially your money partners? What have you had any issues around that?
I think in the beginning they were a bit harder on me because it was something very new. So I had to
Yeah.
do the numbers a lot. And people say that's easier. It depends. I really crunched the numbers, made sure everything worked well. I had to really explain everything, how it went. So I found the beginning was harder because
Mm,
even though they're my family, I had still had to convince them it's a profitable venture we're doing. It's not
right.
just me deciding, oh, let's buy a building and it's good investment. So the beginning was very hard, I found, because I was really trying to prove myself, making sure that it was working out. And at the end, when they saw that, it was good investments, we're able to refinance, we're able to get our money back and buy more building. It became easier at the end. And honestly, at the end, it was too easy. And I'm like, really, you guys should be asking me what we're buying, because now
Yeah.
they're like, I'll just give you my money now. I'm like, no, no, no,
Yeah.
it doesn't work that way.
Yeah. No, I can imagine. And I wonder if at the beginning, because you've got such your whole professional career was in banking, I wonder if unknowingly you might have been talking over their heads at the beginning, like too much jargon, too many ROIs, NOIs, all these acronyms and stuff that you know inside out, but the
Yes,
average person doesn't have a clue. Was that an issue or a challenge?
it was a challenge. And you know what I did? I made them do a course in real estate.
Oh my God.
Because it's different when it's coming from me, it's like,
Yeah.
okay, I can explain it, but when it's the third person, sometimes they listen better.
So they took like a full blown course or kind of just an
It was
introductory
just
type
like
thing?
an introductory, like a workshop. And I'm like,
Yeah.
it's good to have it somebody else teaching you, because I
Yeah.
mean, I can teach you, but
They
it's
won't believe you because they know you too well, right? Yeah. It's kind of like, yeah, it's kind of like me talking with my wife sometimes.
that's, sometimes it's worse when it's too close. They don't
It
listen
is.
to you.
It is exactly. Interesting stuff, Charmy. So, okay. So you've got, I believe, do you have 8 buildings at this point? Is that what you and your family group have?
Yeah, in multi-families, we have 8, yes. So total of like 40 doors, yes.
40 doors. Well, that's very, very good. And you accumulated that over a couple of years. Is that correct?
Correct, yes.
Yeah. Okay. Well, hats off to you. That's awesome. Now, how many of these are commercial residential versus residential properties? So, because of
Mm.
5 units and above, I believe is considered commercial residential. 4 units and below is, residential. And the qualifying for financing is quite different in those circumstances. So how is that played with you guys?
So actually, I would say 4 of them are in the residential side, and the other 4 are in the commercial.
Okay.
But there's that gray zone, Dave, when it's commercial, but it's residential financing. It depends on the institution.
Okay. So up to how many units can it be that way?
Actually, people will be surprised, and up to 6. There's some institution that will do
Oh.
up to 6 residential financing.
But what would be I guess, lower interest rates
Mhm.
possibly, but the qualification becomes more personal income based. So was that a challenge for you guys at any point?
Well, at some point, like when we were at 4, I could tell we were maxed out. So that's
Mm,
what that's how I planned it, Dave. Because I could say when you do residential, it is a lot easier in terms of the financing, in the sense that your interest rates are lower.
mhm.
You have more room for negotiation as well.
Okay.
So I maxed out that residential part before we went to commercial.
Got it.
That's it. So it was really on top of my mind, like, I'm gonna do the easy part, max that out, and go commercial after that.
Well,
So,
easiest part for you because you come from that background, 20 years working in financing in the bank for mortgages. So yeah,
but
inside out.
I only did 1 year in mortgages. The
Oh,
rest was
did
a
you?
different. Yes,
Yeah, okay. Well, still, that's pretty in-depth training. You know exactly what the bank's looking for and
that's
what the
true.
red flags and all that kind of stuff are. Very, very cool, Charmy. So what have been some of the challenges on your
Mm.
journey so far?
I would say, like, it's a business, and I knew it was a business coming in there. But there's still a lot of moving parts, Dave. And no matter how you prefer, like, you prepare for everything, there's always like one building or two that's really gonna take your energy.
Yeah.
I mean, one of my building, everything happened in that building. I call it my university building, because honestly, I mean, I did the numbers, but there were so many things. There was flooding, there was like rats at some point,
Ooh,
somebody died in that building. It was
wow.
the same building. I'm like, wow.
Hopefully that wasn't just a 3-unit. That was a little bit bigger one.
It was 6
Yeah,
units, but
6 units. That's a lot to go wrong. Yeah.
exactly. So
Yeah.
yeah, so I mean, there's so many things you can prepare for, but it's still it's a building that you have to maintain with people that live
Yeah.
in there.
Are you
So
doing all your own property management as well at this point?
no, I hired a property manager.
Okay.
Once we were at around 12 units,
You
because that's
outsource that
another
as
thing altogether.
yeah. So I don't know if you've invested outside of Quebec yet or not, Charmy, but based on
Mm.
your knowledge, what would you say are some of the biggest differences between investing in Quebec and outside of Quebec?
I actually have a property in Ontario, but I find Ontario and Quebec are very similar. So
Yeah.
I would say like it depends on people, but Quebec is very different. Their laws are very different. They do protect the tenants a lot more. So you
Even
need
a
to
lot more
know.
than even Ontario, because Ontario is crazy. The laws are so much in the favor of the tenants there. So it's up there. It's similar to that then.
It's very similar to Ontario, I would say.
Mhm. Yeah.
Yeah, so you really need to know how the system works. There are some things though I find it's easier in Quebec. Like as soon as a tenant is late, you can file a file. You can file that they're late, so you can start the process right away.
You can start the eviction process as soon as they're late on their rent. Yeah, I get.
Exactly, that's it. So, but like it's still a very tenant protected. It is cheaper though, I find in Quebec. It's getting more expensive. However, there's still a lot of places that there's good value. That's one thing I like as well. If you don't mind the French, I mean,
Yeah.
it's
Yeah.
yeah. And there's
Well,
a
I mean
lot of
that's another big thing that keeps a lot of English speaking Canadians away from investing in
yes,
Quebec is the language barrier, right? So
for sure.
very cool. And then
Yeah.
I don't know if it's true or not, but I've heard that actually in Quebec, a larger percentage of the population are renters versus homeowners. Is that true, or is that just
Yes, it
something I've
is
heard?
very true. And I can tell, yes, I don't know. I don't know if it's a cultural thing.
Yeah, I think it
It's
is.
not necessarily, they're not, I think in the rest of Canada, they're more very proud of owning a home. In
Mhm.
Quebec, there's a lot of people, they would rather just rent the rest of their life. So,
Yeah,
so you have a
I,
very big pool of choice for tenants.
renters. Yeah.
Yeah, that's
So
it.
what are your plans moving ahead, Charmy? What are your goals for the next year or two with your real estate portfolio?
So we're trying to be more in the bigger units, and also like some of our properties, unfortunately, we're in the variable rate, Dave.
Mm.
So the payments are a lot higher than what I was expecting. So we're trying to
Any
really see.
than all of us were expecting that took a
Yes,
yeah, yeah.
nobody expected. I don't know, was it seven times they raised the rents in 1 year?
Yeah,
The
the
rate
rates.
that's
Yeah.
crazy. So yeah, so we're really trying to see which building we can sell and really focus more on the bigger units. And because some of them I would say is less profitable, so we're trying to
So you'll
stabilize
kind
it.
of get rid of the not so profitable properties, consolidate, try to keep your costs as reasonable as possible. Okay, so
Yeah,
now moving ahead, once you've done that, assuming that interest rates, because quite frankly, Charmy, we got spoiled
I
with those
know.
crazy low interest rates, and everybody thought, hey, that's normal, that's the new normal. No, in fact, I'm, I remember my mother was a real estate investor back in the
Mm.
1970s and 80s,
Oh
and she
wow.
actually went bankrupt through the
Okay.
early 80s because the interest rates went up to 18 and 19%. So
Yes.
we're complaining about 6 and 7% and these kind of things, which is huge. But imagine that kind of
18.
situation. Yeah. And they had, and some of and back in those days, some of the mortgages, they could call the mortgage, whether you're up to
Yes.
date or not, they could just call it. So that's what sunk her. Um,
Wow.
so based on your knowledge now, your experience now, what are you planning to do moving ahead with growing your portfolio?
Well, now we're max on residential, so I actually don't have an option but to go commercial.
Yeah. Okay.
That's it. So we are gonna go more, I would say more commercial. I've always been in long-term investing, but I'm actually looking at short-term rentals now, Dave, as
Interesting.
another option to, to not always be in the long long-term investing world. I find the materials are getting very expensive. There's just I think that's the challenges now for a lot of property owners, is that just renovating, the cost can really be hard to kind of really plan
Justify.
for.
Yeah.
Exactly, that's it. And it could really make your numbers not work.
So you want to get into some short-term rentals to increase the cash flow. Is that what I'm understanding? So you're getting better bang for your buck.
That's it.
Are you thinking of turning some of your existing long-term rental units into short-term rentals?
Unfortunately, they're not zoned for short-term rentals, but I am looking at midterm. Maybe it's an option depending on if there's enough market for it. But yeah, it's very strict there. I don't know how it is in the rest of Canada, but you really need to be zoned to be able to do short-term rental.
Yeah, it's getting stricter and stricter everywhere. That's for sure. So if you are getting into short-term rentals, then, based on your knowledge, what do you think? Are those going to look more like single-family homes, or what are they going to be?
I'm actually looking at more outside of Canada. So I know you had property. I know you live in Costa Rica, Dave.
I did. Yeah.
So
Well, I did.
yeah.
I wasn't into real estate investing very much when I was there. So it was,
Okay.
I didn't get smart and buy a bunch of stuff while I was there, unfortunately.
Because Costa Rica is so hot right now. There's so much interest in Costa Rica. I think it's because of the weather, the people. So I'm actually looking at both, like having a short-term rental and being able to live there. Vacation there at some point.
Mhm.
Yeah. So I'm like,
So just like one individual property.
Yes, right now.
Okay,
Yeah.
I got it. Okay. But as far as
Yes.
like your portfolio goes, I mean, that's great. And you get that going, it'll kind of self-sustain itself, but that's probably not going to generate a ton of excess cash flow. I could be wrong, but just one unit. So are you planning to keep buying more multifamily properties in Quebec, or not so much anymore?
For now, like I said, we're stabilizing our properties. We're seeing how it goes to markets. If there's a good deal, I'm always looking for, how we are. We're always looking. If there's a really good deal, then I will probably be interested in making an offer. But right now, like I said, my main priority really is to make sure everything is working very well, despite of the really crazy rate that we have in some of the buildings. So I want to make sure it's profitable. I want to make sure that, I just didn't buy a building and then just working.
Yeah, with just speculating without any cash flow. Yeah, you want to get make sure the fundamentals make sense.
That's
awesome, Charmy. And moving ahead, are you planning to just keep working with your close family group, or are you going to start raising capital outside of that as well?
I started looking into working with other people. It's a very different ball game. So I'm in the talks with some people. And then the one good thing though is that once you already started building your portfolio, it's a lot easier to have that credibility already.
Oh, definitely. Yeah.
That's it. So I find it's easier now. I don't know if I would have done it in the beginning. I don't even know even though I was in banking.
Well, yeah, it's a little bit difficult. A lot of people want to start raising capital from the very first deal, which you did, but with your family members, very, very close family unit. But bringing in outside investors outside of that really tight sphere is a little bit more challenging if you don't have that track record. Now that you've got the track record, now that you've got the proof of concept, now that you can point to the properties and what you've done, it'll make it much simpler for you to expand your reach out of just that tight family group.
Yeah, I think so. And I still like Quebec as a market I know very well. I think it's something that's maybe some people are interested, but they're not really sure because of the language. But as long as you have somebody that lives in the province, knows how it works, I think it's a great investment.
I think that's a really good thing for you to focus on, because you're right. I mean, most people outside of Quebec are very nervous about the idea of trying to do it by themselves. In Quebec. They would far rather partner with somebody who's actively doing it, knows their stuff. That's a much safer route to go. So I think that's a smart idea.
Yeah, definitely. For sure. And you need somebody who speaks French, unfortunately. So.
Well, no, fortunately, it just makes sense. Like you want to buy property in Costa Rica. It makes a lot of sense to have a Costa Rican contact who speaks Spanish.
Right? Yes.
When I lived there, I saw a lot of foreigners lose their shirts because they charged in and they figured out that, hey, this is going to be just like doing business back in Canada. It's not.
Mm,
The culture
no,
is different. The laws are different. Everything's the language is different. And
that's
if you
it.
just kind of assume that it should work the way it works back home, you're in for a world of pain. So I saw
No,
a number of
that's
people,
it.
I saw a number of people head back home with their tails between their legs over the years when I was down there. That's for sure.
Yeah, and it's a different country altogether. At least
Yeah.
Quebec is still in Canada, so
Exactly.
well, we think it's still in Canada.
For the time being, it still is
Yeah.
until the Quebecois decide to split off and do their own thing.
Uh,
So, Charmy, this has been a lot of fun. Thank you very much for joining me on the show. If people would like to connect with you, and
mhm.
you had your number one way for people to connect with Charmy Galang, what would it be?
I am on Instagram. It's usually the best way to connect. It's Charmy. My handle is Charmy. That's CHARMIE and ANDCIE. CIE as in company in French, actually. So it's Charmy and C.
Nice. Very good. Charmy, thanks very much for being on the show. This has been a lot of fun.
My pleasure, Dave. Thank you.
All right, everybody, take care. We'll talk to you on the next episode.